Hey YouTube, this is Robinhood Investor. Hope you had a great year of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to provide an update on my portfolio, currently at $359,466. Taking a look at my first position is VOO, Vanguard S&P 500 ETF, very low cost ETF that tracks 500 largest US companies. I scroll down a bit, you can see that sectors include heavily tech-weighted, financials, consumer cyclical, healthcare, communications. It's a very easy way to get diversified into some of these sectors. And you can see the top 10 holdings make up about 30% of the total assets. So you can see a lot of these companies are well recognized and very stable. This makes up 8.41% of portfolio, or $30,157. I'm up 75% on this position. Next is Vanguard Info Technology ETF. This is primarily technology stocks. If you scroll down for a bit, take a look at the sectors. 92% technology, and top 10 holdings make up 58% of the portfolio. So some of these companies you recognize, like Apple, Microsoft, Nvidia, Adobe, Visa. This makes up 6% portfolio, or $21,533. I'm up 235% on this position. I think tech is both VOO and VGT were initially the backbone of my portfolio, but then I bought a house recently, so I liquidated a lot of my positions in ETFs, and that's why you see that even though this is $359,000 total portfolio, which is about the same as 1 year ago if you look at my other videos, but yeah, I sold some of my positions, which is why it doesn't seem like it moved much in the past year. But I went up, I'm up overall, and I bought a home. Largest stock position is Nvidia. This makes up 11.83% portfolio, or $42,000. I'm up 529% on this position. Nvidia is known for their GPU chips as well as they're in the data center business. And I can see with accelerated computing growing, the demand for it, Nvidia will continue to grow alongside another company like AMD. Yeah, I have a lot of, this is one of my high conviction stocks, and if this dips for any reason, I want to continue to dollar cost average on this position. But overall, I'm up. Second largest position is Apple. They primarily make iPhones, computers, Mac, wearable accessories like Apple Watch and AirPods. And as people continue to buy more into their ecosystem, their services business is also growing, such as Apple Music, their iCloud, fitness. So some of these services are quick wins for them because there's a lot of Apple users and they continue to gain market share in the hardware business. So this makes up 10.91% portfolio, or $39,000. I'm up 338%. Next is Microsoft. They're in the enterprise solution space. So, for example, like the cloud computing, Azure, as well as Microsoft 365. They're also in gaming with Xbox. They also have like LinkedIn, social media. So a lot of opportunities for growth in enterprise solutions. This makes up 6.76% portfolio, or $24,238. I'm up 282%. Next is Amazon, which is known for their e-commerce as well as Amazon Web Services. This makes up 5.96% portfolio, or $21,344. I'm up 70% on this position. Amazon I'll also continue to add as continue dollar cost average if there's opportunities to buy. Google, this is Alphabet Class A shares, which has voting rights, makes up 3.23% portfolio, or $11,588, up 181%. So Google, or Alphabet, their primary revenue is through online advertisements, similar to Facebook, So you can see YouTube, Gmail, a lot of their products are used, but within those they generate their revenue through the ads within those products. Alphabet Class C share, similar to Class A, but this one does not have voting rights. This makes up 2.43% portfolio, or $8,692, up 190%. Visa in the payment processing space. This one makes up 3.93% portfolio, or $14,069, up 84% on this position. So Visa continues to grow in terms of their network, and as people continue to spend money, Visa continues to benefit from the consumer spending. Facebook or Meta platforms makes up 3.58% portfolio, or $12,816, up 89% on this position. So Facebook also is in the online advertisement space, and they've been betting heavily into the VR space, virtual reality. So I'm interested in seeing how that market will grow in terms of the metaverse. Tencent, they're in a lot of, so this is a play in the Chinese market. This is a large tech company, and they're in fintech, gaming, social media, very diversified. Makes up 3.15% portfolio, or $11,300. I'm up 20% on this position. I was initially up, but it took a significant dip. You can see at one point I was up $99, but yeah, Chinese stocks have been taking a hit. I don't see this as an opportunity. Well, it depends on your strategy, but for me, I think my position is big enough and some exposure, but I don't plan on adding any more to Tencent. Johnson & Johnson in the healthcare space, good dividend stock. Makes up 2.77% portfolio, or $9,926, up 32% on this position. So Johnson & Johnson's in consumer products, pharmaceutical, as well as medical devices. And we can see, I could definitely see Johnson & Johnson being a stable dividend stock to hold. United Health makes up 2.66% portfolio, or $9,540. I'm up 190% on this position. Alibaba, another Chinese stock. This one also took a significant hit. As you can see, at one point it was up to $270, but now it's $118. Oops, let me go back to Alibaba. So yeah, past 5 years, it's only up 36%. This one at one point I was up, but now I'm down 30%. Currently, this makes up 2.35% portfolio, or $8,426, down 30%. Taiwan Semiconductor Manufacturing Company, they're big in the semiconductor chips. I feel like as we're becoming more dependent on hardware technology, TSM will benefit. This makes up 2.3% portfolio, or $8,237, up 46% on this position. Next is McDonald's. It's a good dividend stock. Makes up 2.24% portfolio, or $8,042, up 66% on this position. And I feel like McDonald's has been doing very well in terms of their digital transformation. So depending heavily on mobile apps, as well as some of the kiosks in their stores, restaurants. So they're having a stronger online presence, as well as becoming more efficient with technology. Costco is in the warehouse membership business. Makes up 2.22% portfolio, or $7,956, up 128% on this position. I plan to add more to Costco just because I feel like this is a strong retail play, and Costco is a high value and great dividend play. Home Depot, this one actually did really well this past year. Makes up 2.08% portfolio, or $7,470, 173%. So So as people are spending more time at home, they want to improve their home overall, and Home Depot has been benefiting from that. PayPal in the payment solution space. This makes up 1.71% portfolio, or $6,133, up 69% on this position. PayPal took a significant hit. At one point, it was at $308, but now it dropped to $188. Yeah, I think I plan to add some more PayPal to my portfolio. Boeing makes up 1.68% portfolio, or $6,032, down 10% on this position. So as people are traveling less, Boeing has taken a hit. We'll see how the next couple months turn out, but as flights are being canceled, Boeing demand has been less as well. But you can see past 5 years, only up 26.94%. Berkshire Hathaway, just Warren Buffett's company, makes up 1.59% portfolio, or $5,688. I'm up 58% on my position. So Berkshire is a holdings company, and they're a major shareholder of Apple and Bank of America, along several other large companies. AT&T makes up 1.28% portfolio, or $4,579. I'm down 28% on this position. This one I'm looking at and reassessing on whether I should continue to hold this position, but I'm still thinking through it. Shopify, this is a new position since the last year. This makes up 1.14% portfolio, or $4,068, up 1.63%. I think Shopify is a good e-commerce play, and as brands continue to develop their online presence and want to have a payment processing solution, Shopify is a good platform. Mercado Libre, also a new position. This is big in the, I think they're in the Latinx markets. E-commerce play makes up 1.1% portfolio, or $3,982. I'm down 10% on this position. I think Mercado Libre, as more consumers develop habits around online e-commerce, as well as payments, I think they're also in the payment space as well. Mercado Libre will benefit from that. PepsiCo, it's a consumer staple, good dividend stock, makes up 1.12% portfolio, $3,996, up 46% on this position. Block or Square, another payment processing company. They're also in blockchain or Bitcoin space as well. If you go to the Cash App, you can make trades with Bitcoin. Makes up 1.05% portfolio, or $3,746, down 28% on this position. Square, I might add some more to this just because it took a significant hit. NextEra Energy makes up 0.94% portfolio, or $3,360, up 113% on this position. This is a good energy dividend stock. CrowdStrike Holdings, another new position. They're in the cybersecurity space, makes up 0.8% portfolio, or $2,864, up 39% on this position. Adobe makes up 0.81% portfolio, or $2,893, up 12% on this position. I think Adobe also took a dip. At one point it was, $688, but now it's down $100. Yeah, as companies continue to become more digital, Adobe benefits from that with all the editing tools and among others. Yeah, they're in a lot of different, see the description. Yeah, digital marketing, media solutions, what else? Editing, publishing, digital media, digital experience. So yeah, as companies continue to digitize their experience, Adobe will benefit. The Trade Desk, I think this is also a newer position since last year. They're in the online advertisement space. Makes up 0.77% portfolio, or $2,745, at 159%. Disney, which is in the entertainment as well as parks, theme parks space, makes up 0.73% portfolio, or $2,633, 41% on this position. I think Disney is positioned well with a lot of their intellectual property, and as they continue to distribute more content through Disney Plus, the consumers can get access to that. And it's well positioned, I believe, in competition with Netflix. Twilio is another new position, makes up 0.49% portfolio, or $1,739, down 5%. So they develop communication software, it's a cloud-based platform and services. So they have things like messaging, programming voice, video, IoT. So a lot of different APIs to enable companies to develop their own solutions that are for communication. Teladoc, which is in the healthcare technology space, makes up 0.46% portfolio, or $1,663, down 8%. This is also another new position. Baozun, which is a Shopify China, I'm actually down heavily on this position, down almost 60%, makes up 0.47% portfolio, or $1,700. So yeah, for Chinese stocks, I feel like I have enough exposure and don't plan to make any new trades. That is all in my portfolio. What are your thoughts on this, and what stocks are you holding? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital, or a free stock for using Robinhood. If you like this video, give it a thumbs up. If you want to learn about investing, subscribe to this channel. See you in the next video.